In this video, I want to talk about unlocking the power of exchange-traded funds for your investment portfolio. Investing in ETFs offers several advantages that appeals to a wide range of investors. And so here are some key benefits of investing in exchange-traded funds. Number one is diversification. Actually, this fund gives you a broad exposure, kind of broaden your exposure. ETFs often include a variety of securities such as stocks, bonds, or commodities within a single fund, helping to spread your risk across different assets. So within a single fund, you have an opportunity of investing in bonds, in commodities, in stocks, in mutual funds within a certain, single key facility. And not only that, we talk about cost efficiency. So it has a low expense ratio. So ETFs typically have a lower management fee compared to running a mutual fund, making them cost effective as an investment option because of the fact that they are managed on a shoestring kind of basis. So they charge relatively low fees. And so you have that fee savings that will accumulate over time to amount to something quite huge. Number three is liquidity. So ETFs actually are traded in major exchanges, allowing investors to buy and sell shares throughout the trading day at the current market prices. So you buy and sell ETFs, just like the way you buy and sell stocks. Number four, transparency. When it comes to holdings disclosure, ETFs are really transparent. They are transparent indeed. And most ETF regularly disclose their holdings, enabling investors to see exactly what assets they own and how the firm is performing. Just go to their website. You will now click on the fund. You would be opportune to see precisely the number of holdings and the different classes of assets that constitute that particular exchange traded fund. So that disclosure is there for every investor to have access to. Number five is tax efficiency. ETFs actually, they tend to minimize capital gains. ETFs comes in different types. You have equity ETFs, you have bond ETFs, you have sector-specific ETFs, and as well as international ETFs, now allowing investors to tailor their portfolio to their investment goals and strategies. Because of the variety of what you could invest in, so you have a choice of what to invest in, bonds, equity. You could tailor your investment to attract a specific sector, whichever. That flexibility is always there. Number seven is low minimum investment. And these kind of encourage accessibility. Unlike some mutual funds that require minimum investments, ETFs can be purchased in any quantity, making them accessible to a wide range of investors. They are quite accessible. They have no minimum investment. With any amount, you could very easily buy, a given units or certain units of ETFs, depending on your budget. Number eight is intraday pricing. It has a kind of real-time pricing. ETFs can be bought and sold throughout the trading day at real-time prices, just like you buy and sell stocks. Unlike mutual funds, which are priced at the end of the trading day, when it comes to mutual funds, you buy them at the end of every trading day. But in the aspect of ETFs, it is bought and sold any time of the trading day. Number 9 is automatic rebalancing. And you have what is called index tracking. Kind of index tracking, and these many ETFs automatically adjust their holdings to reflect changes in the index they track. If it's a sector-based, an index-based ETF, actually, they always adjust their holdings to be able to reflect the particular benchmark they are tracking, ensuring that they maintain their intended exposure. For instance, if a stock is dropped, let's take for instance an equity-based ETF. If a particular stock is dropped, if a particular company is dropped from the index, the ETF will automatically drop that particular company and then include an additional company that is added to the index. So their holdings, are tailored to reflect their benchmark, to reflect their index benchmark. Number 10 is income generation, and this comes in the form of dividends. Many ETFs pay dividends from the underlying securities, which can be reinvested or used as income. There's always that flexibility of either reinvesting your dividends, or you could use it, you could plow it back, you could use it as a regular income, or you may decide to plow it back into the portfolio to compound further. And number 11 is global reach. There's that particular international exposure. ETFs can provide access to international and emerging markets, allowing investors to diversify beyond the borders of their home country. They tend to invest abroad. If you buy an international ETF that let's say invest in emerging markets, maybe in Europe, in Australia, in Asia, whatsoever. So you have that particular advantage of tapping into the progress and the economic advancement that's obtainable in other countries beyond your home country. Number 12 is ease of use. So there's that simplicity that is inherently attached to ETFs. ETFs offer a straightforward way to invest in a broad range of assets without needing to select individual securities. So in this particular case, discover that as an investor in ETF, you don't need to pick individual stocks. You simply invest in the ETF, and the ETF does all the stock picking and the asset combination for you, as the case may be. So you just simply relax, buy the ETFs, and the ETF does the bulk of the work of stock picking, portfolio rebalancing, and all other necessary investment procedures for you. Number 13 is innovative strategies. You have thematic as well as sector investing. In other words, an ETF can focus on a specific theme or sectors, such as technology, it's a sector, or renewable energy, green energy, and not only that, it enables investors to capitalize on specific trend or market segments. So which theme do you want to invest in? Which sector do you want to invest in? You want to invest in the technology sector, simply buy a technology-based ETF. You want to invest maybe in the green energy sector, you simply buy an ETF that invest in renewable energy sector. You subscribe to this channel and give me a thumbs up. Don't forget to like this video. And then lastly, number 14, use in retirement accounts. So tax advantage account, ETF, they run a kind of tax advantage account. ETFs can be used within retirement accounts like your regular IRA, the 401k plans, allowing for tax deferred or tax-free growth. That tax advantage is always there. So considering all these advantages of an ETF, it's left for you to really take time and critically analyze this video and see whether you are attracted towards investing in ETF or not. But consider what I've said so far. It will go a long way in giving the knowledge to be able to have a knowledge-based decision when it comes to your desire to invest or not to invest in an ETF.